Exam Scholar, Real Estate Edition.
Question 1. This is a type of ownership where an individual owns the airspace of his unit, but the buildings and common areas are owned jointly with the others in the development. A. Condominium. B. Planned unit development. C. Planned condominium development. D. Apartment conversion development. Answer. A. In a condominium, the individual owns the airspace of his/her unit, but the buildings and common areas are owned jointly with the others in the development. Question 2. The original principal balance is best defined as A. The total amount of principal owed on a mortgage before any payments are made. B. The total amount of principal verbally agreed to be paid on a mortgage before any payments are made. C. The total amount of principal owed on a mortgage before any payments are made but after earnest money has been transferred. D. None of these. Answer. A. The best definition for original principal balance from the given choices is the total amount of principal owed on a mortgage before any payments are made. Question 3. This is required on all loans having a loan-to-value of more than 80%. A. A trust guarantee. B. Mortgage insurance. C. Warranty insurance. D. Deed insurance. Answer. B. If a loan has a loan-to-value ratio of more than 80%, mortgage insurance is required. Question 4. A legal document pledging a property to the lender as security for payment of a debt is called A. A mortgage. B. Property insurance. C. Note of indebtedness. D. A deed. Answer. A. A mortgage is a legal document that offers real property to a lender for payment of a debt in real estate. Question 5. This reports the raw data pulled from two or more of the major credit repositories. A. A merged credit report. B. A multiple source credit report. C. A combined credit report. D. A mixed credit report. Answer. A credit report that pulls from two or more of the major credit reporting agencies is called a merged credit report. Question 6. The time during which the lender has guaranteed a certain rate is called A. The lock-in period. B. The opportunity window. C. The period sans expiration. D. The evaporation period. Answer. A. The lock-in period is the window of time in which the lender has guaranteed a certain rate. Question 7. Loan-to-value is best described as A. The percentage relationship between the amount of the loan and the appraised value or sales price. B. The relationship between the amount of the loan and the comparable net value. C. The numerical relationship between the amount of the loan and the lowest sales price in the last 6 months. D. The percentage relationship between the length of the loan and the appraised value or sales price. Answer. A. The percentage relationship between the amount of the loan and the appraised value or sales price is called loan-to-value. Question 8. Loan origination is best described as A. A process by the lender in getting new loans. B. A process in which the loan amount is released by the lending institution. C. The originating source of the loan. D. None of these. Answer. A. Lenders typically call the process of getting new loans as loan origination. Question 9. This type of insurance protects against claims against a property owner for negligence or bodily injury or property damage to another party. A. Property insurance. B. Mortgage insurance. C. Liability insurance. D. Life insurance. Answer: C. Liability insurance protects against claims against a property owner for negligence or bodily injury or property damage to another party. Question 10. A nonconforming loan is also called A. A jumbo loan. B. A bulk loan. C. A loan in excess. D. A grant loan. Answer: A. A jumbo loan is also known as a nonconforming loan.
Passing the real estate exam can be hard, like really hard. Statistically, only about 50% of people actually pass the real estate exam on their first try. Those people that pass, they go on to become real estate agents. And the people that didn't pass, yeah, they either give up completely or have to try again. Both of these options are painful, disappointing, and upsetting. Exam Scholar Real Estate Edition has been named as the best real estate exam prep by multiple publications for 7 years in a row. If you are about to take the real estate exam, Exam Scholar Real Estate Edition is a no-brainer choice. There is no other real estate exam preparation service out there that comes close. To enjoy the longest membership time, lowest cost, real estate videos, audios, articles, flashcards, vocabulary, exam tips and tricks, a 1-year no questions asked refund policy, and be one of the 35,000 people that it has helped pass the real estate exam, then sign up in less than 5 minutes at www.realestateexamscholar.com.
Question 1. The following could be used by the buyer as earnest money deposit in purchasing real property. A. A promissory note secured by a deed of trust. B. A post-dated check. C. An unsecured promissory note. D. All of the above. Answer: D. This deposit can be in any form but must be disclosed to the seller prior to the seller accepting the offer. Question 2. All of the following are required of a real property security dealer, except A. A real estate broker's license. B. The issuance of a real property security dealer's statement to each person purchasing a real property security. C. File and maintain with the Commission a $5,000 bond. D. Post an additional $5,000 bond for each series transactions involving a real property security. Answer: C. Only one bond is required. An additional permit is required for each series of transactions. Question 3. Seller Abel, the owner of Blackacre, lists the property for sale with broker Baker. Abel fails to authorize the agent to accept the deposit on his behalf. Buyer Charlie makes an offer on Blackacre and gives broker Baker a check for $5,000 as a deposit. Under these circumstances, broker Baker A. Can accept the check if he immediately gives it to seller Abel. B. Can accept the deposit an agent for the buyer Charlie and place the monies in the broker's trust fund. C. Cannot accept the deposit because of the wording of the listing agreement. D. None of the above. Answer: B. The owner did not authorize the broker to accept a deposit on his behalf. The law of agency demands an agent to accept all offers unless specifically instructed by his principal not to do so. Under these circumstances, the broker should take the offer. However, he would accept the deposit at the agent of the offeror, and hold the deposit as the agent of the buyer. Question 4. Which of the following is real property? A. Stock in a mutual water company. B. Fruit on trees already sold by contract. C. Minerals or gas removed from the ground. D. Crops before harvest. Answer: Stock in a mutual water company is an appurtenance. Each share is considered to be appurtenant to a specific piece of real property and cannot be sold separately. An appurtenance is defined as real property. Question 5. Using a note as a deposit from a buyer in making an offer. A. The note must be cashed before opening escrow. B. A note cannot be used as a deposit for an offer. C. The note would be the same as cash. D. The agent should inform the seller that the deposit is in the form of a note before the seller accepts the offer. Answer. D. A licensee may accept a note from a buyer as a deposit, other in the form of a deposit given by builders. The licensee must then inform the seller that the deposit is a note before the seller accepts the offer. Question 6. Richard Rock, a new real estate salesperson, made strong efforts to obtain listings in an unintegrated community. He found success by insinuating to property owners that should minorities move into the area, the value of their homes would increase. Which of the following terms best describes the activities of salesperson Rock? A. Steering. B. Panic peddling. C. Blockbusting. D. Both 1 and 3. Answer. D. Such activity is described as both panic peddling and blockbusting. Question 7. Which of the following will be found in the Federal Fair Housing Law? A. A provision that real estate licensees should not discriminate in the sale of any real estate. B. A code of ethics which requires all real estate brokers to follow the Golden Rule. C. A provision which allows for mortgage subsidy insurance in government loans. D. A provision which allows all prospective buyers to be given the same opportunity to select available houses in their price range without restrictions because of race, color, religion, or national origin. Answer. D. The Federal Fair Housing Law applies to residential property and prohibits discrimination on the basis of color, race, religion, or national origin. Question 8. A real estate broker advertises that if a buyer buys from him or a seller lists with him, he will pay the party $50 from the fee or commission he receives from the transaction. The broker A. Can do this. B. Cannot do this as it is a violation of the Business and Professional Code number 10176. C. Can credit the buyer's escrow account with $50 but he could not compensate the seller. D. Can give a rebate of commission to the seller, but he cannot pay the $50 to the buyer. Answer. A. This constitutes a finder's fee which may be paid to unlicensed person as long as the fee remains a finder's fee. A finder's fee is payable when the person has no negotiations in the transaction whatsoever, he just tells you of the prospect. You need a real estate license if you act as an agent. There is no license required to act as a finder. A finder does not represent anyone, they merely tell a licensed agent about prospects. He does not enter into the negotiations. Question 9. The law which governs the distribution of property after a dissolution of marriage is contained in the A. Code of Civil Procedure. B. Civil Code. C. Business and Professions Code. D. Commissioner's Rules and Regulations. Answer. B. The law which governs the distribution of property after a dissolution of marriage is contained in the Civil Code. Question 10. The distinguishing characteristic of a real estate option when compared to a conventional contract of sale is its A. Lack of mutuality and obligation. B. Irrevocability. C. Mutuality of contract. D. Both 1 and 2. Answer. A. Only one party is bound by the contract in a real estate option, the optionee has the right to either purchase or not purchase. Question 1. A real estate broker only has a right to earn a commission when the property sells during the listing period except when which of the following is included in the listing agreement? A. A broker's protection clause. B. Exculpatory clause. C. A subordination clause. D. None of the above. Answer. A. The broker is entitled to a commission if the property is sold to parties with whom he has negotiated during the term of the listing for a stated number of days after the listing expires. Question 2. Harris and Davis, single people, owned a parcel of real property as joint tenants. Harris encumbered his interest for $10,000, borrowing the amount to pay medical bills without the knowledge or consent of Davis. Shortly thereafter, Harris died, with the debt still unpaid. Which of the following would be true? A. Davis and the lender would be tenants in common, each owning 1/2 interest in the property. B. Davis would own all of the property free and clear of the encumbrance. C. Davis would own all of the property but would be subject to the $10,000 loan. D. Davis and the beneficiary would own the property as joint tenants, each with a 1/2 interest. Answer. B. On the death of one joint tenant, the survivors take title to the property without the obligation to pay on foreclosed liens. Question 3. Occasionally, the title to real property becomes unmarketable. Which of the following causes would be least likely to result in that eventuality? A. Imperfect title, due to a breach caused by adverse possession of a prior owner. B. A lease pendens filed by the husband of the owner of record. C. Restrictions imposed by a private owner through a deed notation. D. Public restrictions contained in zoning ordinances and building codes. Answer. D. Public restrictions rarely cause title to real property to be unmarketable, private restrictions sometimes do. Question 4. Prices have risen 20%. What has happened to the value of the dollar? A. It has gone down 16 2/3%. B. It has gone down 20%. C. It has gone down 25%. D. None of the above. Answer. A. For instance, an item that used to sell for $1 now sells for $1.20. The dollar now buys 5/6 of what it used to buy. Its value has gone down 1/6 or 16 2/3. Question 5. What supports the floor and ceiling loads? A. Joists. B. Studs. C. Supporters. D. Mudsills. Answer. A. Joists are the beams that run horizontal and parallel to each other and are used to support the floor and ceiling loads. Joists are beams, not rafters. Question 6. A broker who takes a listing with option to purchase is, first of all, A. A principal. B. An optioner. C. An optionee. D. An agent. Answer. D. A listing agreement which contains an option to purchase is first of all a contract employing the broker to act as an agent for the owner in the sale of the property, and that is his principal role. If he exercises the option, he operates in the capacity of a principal in its resale, but this is secondary to this responsibility as an agent. Question 7. An inner-city neighborhood is well integrated with civic groups working to maintain social harmony. However, mounting problems with schools and with increasing crime have caused several white families to move out. In which of the following statements is broker Brown in violation of the law? 1. He is actively soliciting listings in the area with the slogan "Sell Now, Save Equity." 2. He is offering lower commission rates to whites who patronize his business. A. 1 only. B. 2 only. C. Both statements. D. Neither statements. Answer. C. Both of these acts are in violation of the fair housing laws. Question 8. The liquidation of a financial obligation on an installment plan or basis is A. Conversion. B. Amortization. C. Acceleration. D. Conveyancing. Answer. B. Amortization means to pay principal and interest over the life of the loan. Question 9. Mr. and Mrs. Davis held real property as husband and wife. Mr. Davis died and his will specified that all his interests were to go to his eldest son, Thomas. Son Thomas would A. Inherit an undivided 1/2 interest in the property. B. Acquire a 1/2 interest in the property. C. Acquire title to the property in fee simple, as he is the eldest male heir. D. Acquire no interest in the property as it would automatically go to the widow. Answer. A. Under the community property law, either spouse may will his or her undivided 1/2 to anyone they choose. Question 10. Inasmuch as real property requires more time to market than listed securities, require more care, and comes in larger denominations, its return should be A. About the same as from bonds. B. Higher than from bonds and less than from first trust deeds. C. Equal to the return from first mortgages. D. Higher than that of bonds or first mortgages. Answer. D. The return from real property should be higher than from bonds or first trust deeds because of the above factors. Question 1. Which of the following best describes a complete escrow? A. It is considered a perfect escrow. B. The escrow holder has ceased being an agent for both parties. C. All papers are properly drawn up and ready for final steps to be taken to close the escrow. D. All services of the escrow holder are involved. Answer. C. The settlement in choice C describes a complete escrow. Usually an escrow is complete in the evening and closes the following morning when the deed is recorded. Question 2. When a legal description uses only sections, townships and ranges, the lines relate to the A. Government survey lines. B. Contour lines. C. Recorded tract map. D. Meets and bounds descriptions. Answer. A. Sections, townships and ranges are used in government surveys in describing the location of land. Meets and bounds description outlines a certain area. Question 3. A lender would be exempt from the requirement of providing the borrower with a federal right to rescind notice except A. If the loan is for more than $25,000 and is not secured by the borrower's personal residence. B. If security for the loan is commercial property.
C. I. If the loan is for business expansion.
D. If the borrower is refinancing. Answer. D. A negative question. Refinancing your personal residence is not an exemption and is fully covered by a 3-day right of rescission. Question 4. Fisk owns a lot. He also owns a right-of-way easement over the property of his neighbor, Smith. This easement is appurtenant to Fisk's lot. Fisk sells his lot to Jones without specific mention of the easement in the deed. The easement A. Remains with Fish as an encumbered interest. B. Passes to Jones. C. Terminates unless it is a covenant running with the land. D. Reverts to Smith. Answer. B. Appurtenant easements run with the land and automatically pass to future grantees, whether mentioned in the deed or not. Question 5. Which of the following would normally install conduit? A. Plumbers. B. Electricians. C. Roofers. D. Carpenters. Answer. B. Electrical wiring is placed inside a metal pipe called a conduit. Question 6. Two people entered into a land contract for the purchase of a home and the contract was recorded. A few months later, the vendee abandons the property and defaults on the contract. If the vendee refuses to execute and record some form of release, it will A. Not affect the marketability of the property. B. Result in a deficiency judgment. C. Result in a trustee's sale. D. Create a cloud on the title. Answer. D. A recorded land contract show an equitable interest in the property. When the vendee, buyer, defaults and abandons the property, the land contract becomes a cloud on the title until it is removed by either a quitclaim deed or a quiet title action. Question 7. A broker who is hired by an owner to sell his property must reveal all significant and material information to the principal. Which of the following would be considered material information and must be revealed? A. The new lender will require the buyer to maintain an impound account. B. Agent's knowledge that a better offer to purchase is imminent. C. The prospective buyer is of Oriental descent. D. None of the above. Answer. B. The existence of a better offer that is imminent could very well be a material fact to the seller. It would probably influence his decision on a present offer. Question 8. Generally, the most important determinant of a property's value is A. Age. B. Utility. C. Location. D. Income. Answer. C. Location is the most important factor influencing value, the other factors being utility, size, shape, thoroughfare conditions, exposure, character of the business climate, plottage or assemblage, character of the soil, grades, obsolescence, building restrictions and zones. Question 9. Real property includes the land, those things attached to the land, and thing called appurtenances. Appurtenances include all of the following except A. A dwelling. B. Trade fixtures. C. Watercourses. D. A fence. Answer. B. Trade fixtures are considered personal property. Question 10. How many acres are in the west half of the south half of the south half of the south half of section 27? A. 20 acres. B. 40 acres. C. 80 acres. D. 160 acres. Answer. B. Section 27 equals 640 acres. S half equals 320 acres. S half equals 160 acres. S half equals 80 acres. W half equals 40 acres. Question 1. The right of survivors, in joint tenancy, to acquire the interest of the deceased tenant is called A. The right of conveyance. B. The right of survivorship. C. The right of tenancy extended. D. None of these. Answer. B. In a joint tenancy, if one of the tenants dies, the other inherits the property by means of the right of survivorship. Question 2. Real property is defined as land and appurtenances, including A. Permanent structures. B. Trees. C. Minerals. D. All of these. Answer. D. Real property is defined as land and appurtenances including permanent structures, trees, minerals, and rights of them. Question 3. The amount of the outstanding balance on a mortgage not including any interest or other charges is called A. The principal. B. The original loan amount. C. The primary. D. None of these. Answer. A. The principal balance is the outstanding balance of principal on a mortgage that does not include any interest or other charges. Question 4. A public official that keeps public records of real property transactions in their county is called A. A deed transaction recorder. B. A clerk. C. A recorder. D. A registrar of recording. Answer: C. A recorder is a county public official that records of real property transactions in their area. Also called a county clerk or registrar of deeds. Question 5. A written contract that states the terms and conditions under which a property will be sold, and signed by both the buyer and the seller is known as A. A purchase agreement. B. A purchase note. C. A purchase order. D. A purchase contract. Answer: A. Of the answers given, a purchase agreement is the most correct. A purchase agreement is the written contract that is signed by both the buyer and the seller that states the terms and conditions under which a property will be sold. Question 6. If a loan has a loan-to-value percentage in excess of 80%, what is required? A. Private mortgage insurance. B. A cosigner. C. A down payment in excess of 10%. D. None of these. Answer: A. Private mortgage insurance is insurance required for loans with a loan-to-value percentage in excess of 80%. Question 7. If an owner reduces the principal on a loan before the due date, this is called A. A prepayment. B. A loan reduction strategy. C. A payment in excess. D. None of these. Answer: A. A prepayment is a payment made before the due date and reduces the principal on a loan. Question 8. Another term for pity is A. Principal, interest, taxes, and insurance. B. Principal, insurance, topography, and isolation. C. Parties, interest, taxation, and insurance. D. None of these. Answer: A. Pity stands for principal, interest, taxes, and insurance. Question 9. A mortgage payment that is not enough to cover the scheduled monthly payment on a mortgage is called A. A partial payment. B. A percentage payment. C. An interest-only payment. D. None of these. Answer: A partial payment is a payment that is insufficient to cover the scheduled mortgage loan payment and is normally not accepted by the lender. Question 10. If you are given a formal written notice that a default has occurred, this is called A. A notice of default. B. Intent to levy. C. A notice of court action. D. None of these. Answer: A. A notice of default is a formal written notice that informs of a default that has occurred and that legal action may be taken in the near future.
Exam Scholar, Real Estate Edition.